The wealthiest person you know probably isn't the smartest person you know. That one keeps rattling around in my head. Picture the people who've actually built real wealth, then picture the ones you'd call brilliant. How much overlap is there really? Probably less than you'd expect. If you pride yourself on thinking things through, on being thorough, on not rushing into decisions, this might sting a little. What actually separates people who build wealth from people who study wealth endlessly? That's what we're getting into. This isn't anti-intellectual, and it's not dismissing education. It's about a pattern hiding in plain sight, one you can't unsee once you notice it. I used to believe the person with the best spreadsheet wins. Most thorough research, most detailed analysis, most comprehensive plan. I thought that separated successful people from everyone else, had it exactly backwards. Let me paint you a picture. Someone sits down to finally start investing. They're smart, capable. They want to do this right, so they start researching. Index funds versus ETFs, expense ratios, tax efficiency, Vanguard versus Fidelity versus Schwab. They read articles, watch videos, compare charts. 40 hours of research later, they know everything about investing. How much have they actually invested? Zero, not a cent. While you're perfecting, opportunity is decaying. Every day spent researching the perfect choice, you're losing compounding you'd get from a good choice. That's the real cost nobody calculates. I watched someone keep 12 browser tabs open for weeks, comparing savings accounts that differed by 0.1%. 12 tabs, 3 weeks for maybe $10 a year. That's not being smart. That's complexity as a security blanket. If you're feeling called out right now, good. Means we're getting somewhere. So why doesn't knowing what to do make you do it? You know you should invest more. You know you should start that side project. You know you should ask for that raise. Information isn't the problem, so what is? Your brain has developed a sophisticated protection mechanism. Complex plans feel safer than simple action. When you're analyzing and planning and researching, you're doing something. Feels productive, feels responsible. Except your brain is playing a trick. Planning lets you feel progress without risking failure. You get satisfaction without any actual risk. That's the hidden trade you're making every single day. If you're thinking your situation really is complicated, stay with me. There's another layer. We're terrified of looking foolish for trying something simple. Do a ton of research and fail? At least you were thorough, right? You did everything right, just didn't pan out. Try something obvious and it fails? Now you look naive, unsophisticated. We hide behind complexity because complexity protects ego. I watched people I considered less qualified lap me financially while I was still optimizing. Hard pill to swallow. Perfectionism isn't high standards, it's procrastination in a nicer outfit. While everyone perfected plans, they tested ugly first drafts. That's the pattern I kept seeing. I started watching people who built wealth, not people who talked about building it. 3 things kept showing up. First, bias toward action. They'd rather make a decision in an hour than a perfect decision in a month. They trusted themselves to course correct. Second, comfort with good enough. Not mediocrity, good enough. A good enough decision executed today beats a perfect decision that never happens. Third, speed of iteration. Try something, learn, adjust, try again. Rapid cycles. While overthinkers were on version 1 of their plan, these people hit version 17 of actual results. That gap doesn't get discussed much. I call it the B- strategy now. A B- strategy that gets executed crushes an A+ plan stuck in your head. I know a guy who started a landscaping business. No business plan, no market research, bought a mower, knocked on doors. Everyone said he was doing it wrong. Website first, business license, insurance, pricing strategy. He figured all that out after he had customers. Runs a team of 12 now. Simple scales, complicated fails. Successful wealth builders have this almost irritating tolerance for imperfection. They're not smarter, just less allergic to starting ugly. Most people get this backwards. There's smart and there's wise. Different things entirely. Smart is knowing things. Wise is doing the right things consistently. Smart reads 5 books on investing. Wise sets up automatic transfers and moves on. Smart analyzes every real estate market in the country. Wise buys a duplex in their neighborhood and learns by doing. Emotional intelligence beats analytical intelligence for wealth building almost every time. Ability to delay gratification, stay calm when markets drop, maintain relationships that create opportunities. None of that shows up on an IQ test. All of it shows up in a bank account. The smartest person in the room rarely builds the company. Too busy being smart, finding flaws in plans, explaining why things won't work. Meanwhile, someone with half their analytical horsepower is out there building something. The irony most people miss. Wealth building requires pattern recognition, not pattern analysis. You don't need every variable. Recognize what worked before, do more of it. Saying no to misaligned opportunities takes wisdom, not raw intelligence. Investing in relationships that compound over decades, that's emotional intelligence, not book smarts. You don't need to be the smartest, action-oriented, wise enough to keep it simple. That's the formula. 90% of millionaires used boring, basic strategies. That number rewired how I think about wealth. Not crypto moonshots, not day trading, not complex hedge fund plays. Index funds, real estate they lived in, retirement accounts maxed year after year. Boring, basic, effective. Compound interest doesn't reward brilliance. It rewards showing up again and again. So why make it complicated? Because simple feels like cheating, feels like you must be missing something. If wealth was as easy as automatic transfers to an index fund, wouldn't everyone be rich? They would be if they did it consistently for decades. The gap isn't knowledge, it's follow through. Small daily contributions beat perfectly timed lump sums, mathematically proven. More importantly, psychologically sustainable. You don't have to think about it. Set it up once, forget it exists, let it compound while you live. Wealth isn't built in moments of brilliance, it's built in months of monotony. The index fund investor who never checks their account usually beats the active trader checking daily. Less attention, better results. Tell that to your overachieving brain. A guy I know makes 6 figures from an idea people called too obvious. Bought a house, lived in one room, rented out the other 3. House hacking. Mortgage payment, 0 housing costs, actually negative. No complex investment thesis, no market timing. Math a 12-year-old could understand. Flip your thinking from what's clever to what's repeatable. Best income streams don't make you sound smart at parties. They work while you're not paying attention. Renting out a spare room, parking spot in the city, storage space, not sexy, just friction-free money from assets you already own. One skill, monetized multiple ways, beats 5 half-learned skills every time. You don't need to become a Renaissance person. Appreciate you sticking around. If you liked what you heard, smash that like button, hit subscribe, and drop a comment. I'd love to hear your take. And if you know someone who'd enjoy this, share it with them. Get really good at one thing. Find every angle to make it pay. Consulting, courses, content, coaching, same expertise, different formats. I know you have a side hustle idea in your notes app. When did you write it? 2019, 2020. People making good money from simple ideas aren't smarter than you. They clicked publish. Mobile home parks, laundromats, storage facilities, the overlooked markets. Not glamorous, not complicated, quietly profitable, while everyone chases trends. Sometimes boring is exactly where the money is. Ever gotten a raise and somehow ended up with less saved? Yeah, me too. Lifestyle inflation, the silent wealth killer that gets almost everybody. Make more, spend more. New car, nicer apartment, upgraded subscriptions, better restaurants, bigger paycheck disappears just as fast as the old one. Some of you are already defending your subscriptions. I get it. Kept my streaming services too. Not about deprivation, it's about intentional direction. Every dollar has a job. Most people's dollars are unemployed. Quick audit that might shift your perspective. Open last month's bank statement. Find every recurring charge, subscription, automatic payment. ask honestly, which would I actively sign up for today? Not which do I use occasionally, which would I choose right now if I didn't have it? That gap between what you're paying for and what you'd choose, that's your hidden money leak. Minimalism isn't living with nothing, it's living with intention. Getting rich slowly is easy. Hard part is patience while everyone else looks richer. They don't show you the leased cars, credit card debt, lifestyle built for Instagram. Real wealth is usually invisible. Building it means rejecting lifestyle inflation at every raise. That's the part most people don't want to hear. Wealth isn't built in isolation. People who build it fastest know this instinctively. Let me tell you about someone who understood this. She wasn't the smartest entrepreneur in her industry, just the most connected. Every opportunity came through a relationship, investors, partners, big clients. She invested in her network like others invest in stocks. Consistently, over years, expecting compound returns. Her network became her net worth multiplier. Most people try thinking their way to success solo. The wealthy collaborate their way there. The mastermind effect. Surround yourself with people building wealth. You absorb their patterns. Their opportunities overflow into your life. Their standards become your baseline. Your network isn't your net worth, but it determines the ceiling on it. Something tactical to consider: bartering skills for equity. You might not have capital, but you have expertise. Trade it for stakes in growing ventures. Web design for equity, marketing for equity, time and talent for ownership. Host masterminds from lived experience. Charge for access to your brain and network. Build a personal brand that attracts opportunities instead of chasing them. Lone genius is a myth. Wealth is a team sport. Your teammates determine your ceiling. I used to think rest was something you earned. That almost cost me everything. We don't talk about this enough. Your health is the foundation everything else sits on. You can't compound wealth from a hospital bed. Burnout isn't just uncomfortable, it's a tax on future earnings. Every time you push past exhaustion, you're borrowing against future capacity. Interest rate is brutal. Rise and grind has destroyed more wealth building journeys than bad investments. So what actually works? Focus deep work bursts, not marathons. Strategic time blocking for highest value activities. Ruthless protection of recovery. Scheduled rest isn't laziness, it's sharpening the tool that makes money. Decisions get worse when you're tired. Risk assessment gets sloppy. That deal looking good at midnight after 70 hours, different after a weekend off. People building sustainable wealth treat energy like a strategic asset, not something depleted heroically, something managed intelligently. Work smarter, not longer. That's not a cliche, it's a wealth strategy. Rest intentionally because future you returns compound interest. The wealthy don't avoid risk, they take specific kinds most people overlook. Asymmetric bets, low downside, high upside. Think about it this way. What could you try where worst case is losing a little time or money, but best case shifts your trajectory? Most people obsess over avoiding downside. Action takers obsess over finding the right upside. What would you try knowing you could afford to be wrong? A mindset that rewired how I think about this stuff. Treat experiments as 5-year tests, not permanent decisions. Business that failed isn't a scar, it's data from a 5-year experiment. Investment that tanked, now you know something. Frame it this way and failure stops being identity. It becomes information. Best opportunities often come from accidents. Pivots you didn't plan. You'll never find those pivots being too scared for the first imperfect step. Cost of inaction compounds like interest except against you. Every year waiting is a year of compounding gone forever. Action creates clarity. You can't think your way to certainty. Start the thing, learn from it, adjust. Only algorithm that actually works. How do you put this into a system that runs without constant attention? That's the goal. Think about money less, not more. Automate the boring stuff. Set and forget mechanisms working while you live. Automatic transfers, bill pay, retirement contributions. Remove yourself from the equation wherever possible. Your consistency isn't reliable. Automations is. Framework I keep coming back to. Plan life in 5-year increments, long enough to build something real, short enough to adapt. Where do you want to be in 5 years? What would need to be true? Work backwards, set up systems moving you there automatically. Stop measuring by dollars alone. Measure by freedom. How much time is truly yours? How many obligations could you walk away from? That's real wealth. Optionality, choice, freedom to say no. Gamify savings if it helps. Apps making it visual, fun, competitive with yourself. Whatever tricks your brain into consistency, use shamelessly. Build an invisible empire. Automated funnels generating results without daily attention. Goal isn't thinking about money more, it's thinking less because the system handles it. What separates temporary change from permanent transformation? Not tactics, not strategies. Who you believe yourself to be. Difference between trying to build wealth and being someone who builds wealth. One's an activity, the other's identity. Activities get skipped. Identities are who you are. You won't trick yourself into wealth. You become someone who builds it naturally. How do you shift identity? Visualize your wealthy future daily. Not woo-woo manifestation. Concrete and specific. What does Tuesday look like when you've built what you're building? What decisions are you making? What does freedom feel like? Your brain can't distinguish vivid imagination from memory. Use that. Integrate wealth conversations into family life. Talk money at dinner, not stressed, strategic. Normalize building wealth as something your family does. Daydream about it, seriously. Let your mind wander into wealth scenarios. You're priming your subconscious to notice opportunities it would otherwise filter. You don't build wealth thinking like the rich. You build it acting like someone who builds wealth. Eventually the acting stops being acting. It's just who you are. I'm giving you something most people never got. Permission. Permission to start before ready. Be imperfect. Choose simple over sophisticated. First step doesn't need to be right. It just needs to happen. You don't need more information. You need to act on what you already know. That's what the not-so-smart people understood all along. They weren't waiting for perfect. Weren't analyzing every angle, just moving, learning, adjusting, building, while smart people stayed stuck in their heads, action takers stacked results. My question for you, what's one thing you've been overcomplicating? Not 5 things, 1. What would it look like to do the obvious version this week? Not optimized, not researched, just obvious, imperfect, good enough. Here's what I've learned watching wealth get built and lost. Best financial plan is the simple one you actually follow. Overthinking got you here, action gets you out. Start ugly, start small, start now. Compound interest on your future is already ticking. Only question is whether you let it work for you or keep waiting to feel ready. You'll never feel ready. Start anyway.